So we've got the 16 million earnout, which will be coming in over the course of a few years. Plus, we're going to have the Beacon shares. Now these are tangible assets that we can see the value of. And so I think that really feeds into a valuation story that clearly suggests that we're undervalued, given that we've got cash that covers almost our entire market cap. Then we've got this asset in Colle Santo now via the Beacon holding and the earnout, which is clearly marked way above the residual value implicit in our market cap.
Hello, you're watching Proactive. Joining me in the studio today is Reabold Resources co-CEO Stephen Williams. Stephen, very good to see you again, and a lot to catch up with. Let's start with Colle Santo. How does the deal with Beacon Energy exemplify Reabold's investment model of unlocking value without taking on further funding risk?
Yeah, just to step back and maybe just describe Reabold's business model again, sort of in fairly brief terms. We found that where we can add the most value is finding assets that are reasonably well progressed, or at least de-risked from a geological perspective, but they needed a little bit more investment and a little bit more care and a little bit more stewarding to take them to a forward where you can really crystallize significant value from them. So we have limited funding requirements from Reabold, a certain amount of time and work, and then hopefully an exit with meaningful uplift. We first, I think, exemplified that with the Victory field, which we sold to Shell. So we picked that up for nothing directly from the government in a licensing round. We invested a little bit of money, did a little bit of work, and got it to the point where a big company like Shell was interested in purchasing it from us. And that was a very successful first example of the business model in action, and therefore we were not required to put the significant investment into the field that would be required to develop it, and we left that to Shell. I'm very pleased to see that just a couple of weeks ago Victory came into production. Shell have got that producing, and it's now adding a meaningful amount of gas supply into the UK. So the deal we've done on Colle Santo is not dissimilar, or the journey we've had with Colle Santo. So we got into Colle Santo about two and a half years ago. We started investing relatively small amounts of capital, but really took the project forward a long way with that capital. So particularly this was getting through the VIA Commission approval process. So this is really an environmentally led approval process, which is the absolute key regulatory step that was required in Italy to get this project moving forward and to subsequently allow development. So we got to that stage, we've really added value to the project, and now to your point about funding risk, there is obviously a significant funding requirement behind the development of this project. We do believe there will be attractive sources of funding for that, but in the interim, we've taken any dilution risk away from Reabold. We are not putting any more money in ourselves. We've done the Beacon transaction and now allowing Beacon to go and raise some money that they can make available to the project to take it further forwards.
Stephen, the 16 million euro earnout from Colle Santo represents a significant return. Can you explain how the structure of that deal secures both near-term value as well as longer-term cash?
Yeah, so I think the bulk of the consideration from us, the most valuable part, is that earnout. As you said, that's longer term cash, so that'll start to pay back when the project goes into production in maybe 18 months time. So that's going to be a significant cash flow stream available to us. But we also get a significant amount of Beacon equity as part of this deal, and of course we'll get that as soon as the Beacon fundraise and RTO process concludes. So we have a nearer term asset that will have a clear marker of value. It'll be a traded share. We'll be able to see exactly what it's worth, and we'll have some flexibility in terms of what we do with those shares. So that's nearer term value available for shareholders, and this longer term cash flow stream that's coming.
I mean, as you mentioned, you're going to hold equity in Beacon Energy, 29%, I think. How do you view that equity position strategically, and what upside could it offer as Colle Santo moves forward towards first gas in 2027?
Yes, I mean, we certainly didn't want to lose our exposure to the project at this time. We think it's a really good project, and we think it's going to continue to add value as it goes forward through FID and into development. So we want to have that exposure through both the earnout and through the Beacon equity holding. But of course, the great thing about the exposure being in a listed company is we can make judgments according to the market price of Beacon as we go. So if we think it's appropriate at the right time, we could sell those shares, we could distribute them, or we can just hang on to them. So we get a lot of flexibility through that part of the consideration that we got from the Beacon deal.
Turning to the UK, what's the latest thinking around early monetization at West Newton, and particularly the plan to use existing wells to power Bitcoin mining operations?
Yeah, so if you recall, West Newton has 3 existing wells on it. These are the discovery wells that discovered the field and the gas resource there, and they're all vertical wells. Now, vertical wells at West Newton are never going to be particularly productive, and we always envisage that we'd need to drill horizontal wells to deliver commercial flow rates. However, the vertical wells are there, With a simple recompletion exercise, we should be able to get these things producing in some quantity of gas. And the Bitcoin mining is really just a way of taking advantage of that production and getting the things into some form of value creation much more quickly than waiting to develop the field fully through the drilling of horizontal wells.
You're also waiting for environmental agency sign-off on the A2 well at West Newton, is that right?
Yeah, so we're going to recomplete the A2 well with an oil-based stimulation program, which we believe will break through the damage that was caused by the water that was used for both the drilling and the completion the first time around. We're waiting for environmental sign-off on that, but that should be imminent now. We're expected to get that certainly within the next few weeks. When we recomplete that well, we get the gas to flow. That fully de-risks the field from a subsurface perspective, and that will then be the source of gas that we can use for this Bitcoin mining early monetization plan.
I mean, how does a potential crypto mining initiative fit with your broader strategy of maximizing returns from energy assets? And could it be replicated elsewhere in your portfolio, Stephen?
Yeah, I mean, the potential to replicate it certainly exists both within other areas of our portfolio and also other assets and projects that we've seen. I mean, we're constantly looking at other assets, and sort of stranded gas assets is an area that we're very interested in. And there's certainly the opportunity to do crypto mining in other projects in other parts of Europe in particular. More broadly, though, I think West Newton in a larger scale is an extremely appealing asset from the perspective of providing gas to power, and particularly power for data center type operations. So we're not just talking crypto mining here, we're talking about a broader kind of data-led approach. I mean, that's where incremental demand is going to be coming from in the UK, and West Newton being onshore is uniquely well positioned to provide energy for that kind of proposition.
Stephen, when you look at both Colle Santo and West Newton together, how do these projects feed into your overall valuation story and your appeal to investors?
Yeah, I mean, I think we've been slightly frustrated with the valuation. I mean, the stock has been trading at little more than our cash value, essentially putting next to zero value onto the two core projects, which we obviously think is incorrect. And I think having done the transaction with Beacon, we've actually provided a fairly clear marker of value for that project. So we've got the 16 million earnout, which will be coming in over the course of a few years, plus we're going to have the Beacon shares. Now these are tangible assets that we can see the value of. And so I think that really feeds into a valuation story that clearly suggests that we're undervalued, given that we've got cash that covers almost our entire market cap. Then we've got this asset in Colle Santo now via the Beacon holding and the earnout, which is clearly marked way above the residual value implicit in our market cap. And then, of course, there's still West Newton on top of that. And West Newton is and always has been the big prize. I mean, that could be worth many multiples of our current valuation. And we look forward to going and continuing to prove up that project and take it forward and deliver that for shareholders.
Well, I hope you'll continue to keep us updated on your progress. Very good speaking with you today.
Great. Thank you very much.
Stephen Williams is co-CEO of Reabold Resources.